Hi, this is Rohit Srivastav and it's Sunday, the 5th of July. This is the day before the budget. Some of you might have noticed that I've been putting up a lot of my recent interviews, but it appears that a lot of events and a lot of events, especially on charts, have been converging, and I've not really been able to speak about them. So I thought a personal video would actually highlight those issues in detail, what you really need to be watching for in terms of trends in the coming week. Uh, Among these things, I think one of the key issues has been global markets. I think recently a lot of people have thought that we're going to somewhere see some kind of decoupling or some kind of move that would actually see Asian markets do better than the world markets. But we're in a very tricky scenario. We're in a scenario where apart from, I mean, if you've really seen markets between 2003 and 2008, you saw various asset classes essentially moving together on the way up. And somewhere to a lot of people it appeared that a delinking process was on. And that essentially happened because when you are having a multi-year top, then you saw equities topping out. In fact, I should say real estate globally slowing down much before equities. Then you had equities in the U.S. markets topping out, then equities in other markets, and then commodities. So while all the markets seem to be appearing moving up together for so many years, the topping out process actually saw lead-like effects across segments, and therefore a lot of people thought that these different segments were going to move differently, which means currencies, commodities, and equities were going to do differently. But starting May 2008, once all the asset classes had actually made tops and the dollar had actually reversed its falling trend, you saw the same trend start on the way down, which means we saw falling currency prices versus the dollar, we saw falling commodity prices, and we saw falling equities all the way into November to December of 2008. And ever since then, again, we've had a bounce back process across asset classes. So it's not just been equities that have been rallying, so have commodities, and the US dollar index has actually retraced 61% of the rise it had seen last year. So the point here is that people are thinking that that all these markets are going to move differently, but the reality is that all of these markets are moving in tandem, and that's the real issue here, because you've had such a big liquidity expansion driving these markets over the last decade or two, that you're still seeing these markets move together, and therefore the sense really now is, where are all these markets together headed, and is it really possible to decouple when you're going through the process of liquidity unwinding? And I think the key asset class to watch here is going to be currencies, which means the US dollar index, and the last week or two is seeing a clear sense of change in direction in the dollar trend. So all the people who are really thinking that you're going to have a decoupling, or you're going to see Indian equities maybe do better than others, I think the key or maybe commodities do better, or maybe probably gold, the thing to watch is really the dollar, which means that after a 61% retracement, if the US dollar index this week is given an engulfing bull on the weekly charts, and if it starts moving up from here, and you'll probably then see, just like you saw early part of this week, suddenly all currencies moved lower against the dollar. And once you see that trend firming up further, and it becomes pretty clear that the dollar is rallying from here against all currencies, then you're into what we would call a clear sign that you're entering the most difficult phase of the unwinding of credit that actually started last year, which means you're hitting the button on deflation much harder now than it was last year. Last year people thought it was coming, it slowed down, but now you'll really be hitting the button when the dollar starts strengthening across asset classes. And moment that happens, my biggest fear is that all asset classes will start falling, which means equities, commodities, and gold. And so that's the key thing I wanted to highlight. You need to really be watching this, the dollar index and dollar, very closely. None of the other events will probably matter. I'm not so sure, apart from a day's effect, what impact the budget itself as far as Indian markets is concerned will have. almost the media has almost discounted every possible positive after the recent elections, which means whatever you do, it's going to fall short. And even if there is something which is a positive surprise, apart from a day's effect, I think after that you'll be back to looking at where the dollar and all asset classes are headed, because the biggest problem of the next 6 to 8 months or 6 to 12 months is going to be deflation, and the best indicator of deflation is going to be where the dollar index is headed. So that's what I wanted to highlight. That's the key thing to be watching, and not really, everything else appears just like a smoke screen in front of that. That's it from me. Thanks and bye.